I'm Nicole Rashad with the Investing News Network, and I'm here at day one of Minds and Money New York. And joining me is Stephen Letwin, President and CEO of IAMGOLD. How are you today?
I'm very good, thank you.
So how's the conference been so far? I know we're just getting started, but
Conference has been good. It's well attended, and Minds and Money always does a great job. So very well organized, and we're seeing some very good people.
okay. So on that front, speaking of Minds and Money, I just wanted to know what attracted you to this conference.
Well, Minds and Money is very active around the world, so they throw some very good conferences: Hong Kong, Australia, Canada, New York, London. So we generally will attend their conferences and sponsor a lot of things that are going on. So it's certainly been a very productive experience for us. They're as I said earlier, they're very well organized and they're well attended.
Okay, great. So you've been here for a little bit. How does investor sentiment seem to be around the gold space right now?
Extraordinarily weak, and we were talking about that today. The amount of capital that has left the business, the industry, is very high. Very little capital coming in. Generalists haven't shown up again since they left probably in 2012. So the fact that gold prices have sort of stayed in the 1250 range for the last 6 years doesn't do a lot to excite people. So I think there's investor fatigue. And bottom line is there's probably too many of us relative to the fact that the capital pool is shrinking. So extremely difficult to get a lot of interest. You wouldn't want to be trying to raise money right now in any either major, mid-tier, or junior space.
And speaking of the gold price, I guess you've kind of alluded to it already, but how are you feeling about it and where do you see it going?
It's all tied to the U.S. dollar. So if the U.S. dollar weakens, if the U.S. economy weakens, we'll see gold prices probably react. But right now, we really haven't seen that. The U.S. dollar continues to be very strong. Trump is probably going to make sure the U.S. economy stays strong before the election. So, as a haven for investors' money, gold really hasn't stood out. And so we could see it range bound between 1250 and 1350. And I think investors want to see it break through the $1,400 mark. And then if that happened, maybe generals would come back into the space. But right now, we really aren't seeing any new faces. And a lot of the active managers are being hurt by the passive investors. So that's happening at the same time. So it's just one of these times when you need a really strong balance sheet like we have, and you need to hold the course and wait for the cycle to turn back to better times.
And so in your presentation earlier today, you mentioned that exploration budgets are still below historical numbers, but gold is taking like over 50% of that. What does that mean for IAMGOLD as a company and the space as a whole?
Well, over the last 3 years, we've had incredible success. We've more than doubled our reserve base. And, you know, a year ago, that was received extremely well. So I believe investors really like the fact that we went from 6.8 years to almost 18 years in the span of 3 years. But right now, investors are not rewarding any companies for in the ground reserves. In fact, they're looking for free cash flow. So free cash flow really is what everybody's looking for. So in the ground reserves really aren't at the top of the list. We need to see companies that produce free cash flow, don't need to come to the equity markets, and exploration dollars, unfortunately, probably are going to be under pressure until there's a change in that sentiment.
Okay. Switching gears a little bit to IAMGOLD. You recently had a new gold discovery at your asset in Timmins. Can you explain a little bit about that and what that means for the company as a whole?
Yeah, we had a phenomenal discovery about 1.5 kilometers northeast of our main Cote deposit, and probably sitting at 12.5 million ounces, lower grade, but bulk tonnage, very close to surface, very low stripping ratio, 6 kilometers off the highway. It's an extremely attractive deposit slash project. But again, the market's not interested in us moving ahead and spending $1 billion to develop it. They'd much rather see that put on the shelf for now. And then when the cycle gets a little healthier, then maybe we can move ahead. But it's a disappointment for us because we think it's a fantastic project.
Okay. And my final question is, what are some things you have coming down the pipe in terms of projects, anything like that, that gives you a little bit of a competitive edge that might get you kind of recognized with
Well,
investors?
we definitely have to improve our free cash flow. And Saramacca, which is in our Suriname, in the country of Suriname, and Roosevelt mine definitely is something that will bring us better economics, short cycle economics. So that's a big plus. Optimization of the mill at Essakane in Burkina Faso is a big plus. And ramping up Westwood, which, we had a bit of a setback, unfortunately. We had a bit of a setback in the first part of the year. So we need to get that back on track. If we can get those three things working, I think we can get more confidence back in the stock and see the price go a little higher.
Okay, great. Well, thank you so much for joining me today. I hope the first day is going well for you. Day two goes well as well. And once again, I am Nicole Rashad with the Investing News Network, and joining me is Stephen Letwin, President and CEO of IAMGOLD. Thank you so much.